guys, if you don't know already, Sundeep is one of the top lead angel investors on Angel List, syndicate leads, I believe. And so out of curiosity for you, based off of all the 3 masterclasses, were they spot on? Were they kind of what you would have wanted when you first started? Like, how did you even start? Because thinking about it, like, you've done hundreds of deals at this point.
Yeah, yes, and that's it's an inflated number based on small investment sizes.
Hey,
Yeah,
you know what? They still count. Your hard-earned money still
I
counts.
absolutely agree.
So,
It's this beautiful thing about Republic is you can invest small amounts and build a portfolio with $100 at a time, which I think is just magical. Look, let's answer the first question first. What do I think about the webinar series? I think it's great. I mean, it takes, I think one thing hopefully you gather from all the speakers is it takes time, right? Like, sure, some people get lucky with their early checks, maybe. And luck comes from being in the right place at the right time and having the expertise to sort of make those bets. But broadly speaking, I think angel investing takes time. A lot of the folks who spoke talked about mistakes they made early on. And what we did here is we tried to condense the lessons of several accomplished investors into a few hours. And that took years, right, to learn. So huge props to you, Cheryl, and for putting this together, and a huge thanks to all our guests, because I do think that this has become a great primer and the sort of condensation of years of angel investing mistakes and experience. So I think it's great. I also think it's just the beginning, right? Like, I think learn by doing is really applicable when it comes to angel investing. So whether it's on Republic, whether it's elsewhere, taking the lessons and not just saying, okay, great, I love you sort of, I got wings, let me kind of go fly now. It's like, look, all right, you got your wings, but it's still going to take time to learn to fly, right? So when you are ready to make that first investment, go through the diligence, go through all the lessons that were taught and that you identify with, make that investment, and then see what you learned in that process. What did you learn? You did diligence, follow the investment 3-6 months out, and look back and be like, I could have, should have maybe done this differently, that differently. So even if you lose the money, you didn't lose the time because you learned about how to make the next investment much better. So that's how I view the sort of canon of knowledge presented here. Pause. Do you want me to chat more, or do you see any other questions?
Yeah, I did see a question actually, and you're not off the hook yet, but I did see another question about just real estate in general. I know a lot of people are super excited about the fact that we, acquired a compound, so now Republic Real Estate. There are 3 properties currently there available, Miami, Austin, and Nashville. And you can go and check it out at republic.co/real-estate. That will have pretty much the information that you need with all the questions that you had. But we're also going to have a webinar on that. So stay tuned, because I know that that's on everyone's mind. I think it's actually something that's very tangible, and that a lot of people feel they can kind of get their feet wet with something that they know. And that's also just generally a little bit less of a riskier asset, given that it's, it's collateral there. But don't worry, stay tuned. Even though this Masterclass series is over, we will have some more content for you around that area. Sundeep?
There's actually there's a question here that I think is worth responding to. For some of the debated deals that someone did or did not do, what are the nuanced risk reward to be weighed? One thing I think worth noting, and I think, Cheryl, you put this in one of the presentations, is sort of the anti-portfolio. Yes. Due diligence helps you make an informed decision. And ultimately, hopefully, what that decision is you put enough time in that, well, however it turns out, you feel like you made the most informed decision you can, given kind of trade-off of time, et cetera. I think it's also worth tracking the ones you passed on and keeping track of why you passed. Because if in 3 years they get acquired for a lot of money, instead of just kicking yourself and like, I should have done it, you can go back and say, you know what, I had some real concerns. And maybe they overcame those concerns, maybe they pivoted into a different business entirely, but sort of recognizing that at the time you made an informed decision is important. Now, hopefully also as you do this and you keep track and when you do invest, you write down ultimately what got you across the line, maybe even, hey, I have these concerns, but I'm going to still invest because of this other thing, which I'm really excited about, or, hey, I'm passing, it was really hard, here's what I liked, but I couldn't get past these things. When you revisit those notes for sort of quote unquote to your, word of debated deals, the nuanced risk reward, it's obviously, I shouldn't say obviously, many of us are doing this for financial upside, but there's, again, high risk. It's in learning. I think angel investing is something that you just learn by coming back to, and the more detailed your notes to yourself, the more you will learn as each deal you come across.
Awesome. I think Rex actually has a good question is how should we evaluate a deal when it's sometimes too favorable? How should angel investors evaluate such a deal? I'm not sure that's usually the case, right? Based off of your experiences, sometimes a deal too favorable. I feel like it's usually the opposite where you kind of have to like find a common ground there.
Yeah, I mean, so favorable, if you're talking about favorable terms, you know, there's this old phrase, if it's too good to be true, it might just be. But that said, sometimes there are recaps. For example, right now with COVID, there's a number of companies that raise at high valuation that are having to kind of, do a down round or a flat round or recap the whole company. Those can be incredible opportunities where terms are extremely favorable. Now, you'll want to really understand, like with any opportunity that looks too good to be true, is it, right? What are the fundamentals? What are the core assets? What's the price? Who else is invested? I mean, all the standard diligence applies. Just, I think the sort of, if I had one point to make, it's if it's too good to be true, put that as one data point, but still evaluate the opportunity, terms aside, right? Forget about the price. Is this something you want to invest in? And then if you get across the line, then price can become a part of your decision. But if it's too good to be true, but it's not a good company,
Yeah.
sorry, but
And
it's
sometimes
incredible, but it's not a good company to invest in. It's not a good company to invest in.
yeah, exactly. Don't have your vision blurred by kind of the terms, but at the end of the day, be true to your mindset there. Actually, question for you again from me. Hi. So you were a founder several times, right? And I'd love to see, or from just personally, how you've incorporated your kind of background in operating into kind of how you became an angel investor.
Totally. I think you're seeing a shift, or let's say I'm seeing a shift in my worldview of investors who maybe came from traditional finance backgrounds or business schools to this sort of operator turned investor. When I think part of the reason for that, and this, for how I became it, it's when I'm meeting with a founder, when I was meeting with founders in the early days of my angel investing, I had been in the other person's shoes, just getting a company off the ground, facing all these problems, everything from hiring to crazy legal fees, just getting a thing started, to this, that, the next thing. And that empathy helped me, one, get access to deals, right? So there maybe for companies that were had highly competitive rounds, because I was an operator, there was sort of this like, hey, you know what I've been through and you could probably help me execute. So there's that aspect of it for sure. And then there's the aspect of lessons that I learned maybe the hard way, co-founder drama. Like I became, because I've had to deal with that, sensitive to like, okay, what's the co-founder dynamic here? Like, are they going to get along? And I've definitely passed on deals where I didn't believe the chemistry, right? And so I think having my own 8 years of founder experience, all the lessons learned and all the things that went wrong, and all three companies found soft landings, but a lot of mistakes made along the way for each of them, just helped me kind of, just more things to watch out for, helped me kind of stay narrow and focused on the companies that went through my filter.
Yeah. So you've been burned before, but fool me once, shame on you. Fool me twice, shame on me, type of thing.
Well, yeah. I mean, look, right? Like experience. I think part of, again, the reason why we're starting to see these operator investors. I mean, I don't know the numbers, but my guess is they're doing pretty well relative to folks who are new and just pick up investing without having built a company. It's because, again, they've lived these same mistakes, right? Like every startup's different, but a lot of startups have a lot of the same core issues, right? Hiring, culture is rarely talked about. In fact, it wasn't even on any of the checklists, but it is so important, right? And oftentimes it trickles down from the founder, but how intentional is the founder or the founding team being in building culture, right? Like these are things that may not be on checklists, but as a founder, I've seen, so I'll be like, hey, how are you approaching culture? What are books you're reading? What are, and so anyways, it's just, I think having been an operator, I don't know what the results are en masse, but I do think it makes a better investor.
Yeah, actually, awesome. Hiri actually asked if, you are sharing your real life lessons now, but do you have anywhere where you're sharing like real life tactical nuggets, or like a blog or something?
Right here on Republic, honestly, anything, you'll hear it in the questions I ask. You'll hear it in the questions I answer from Cheryl. But I thank you for the question. I'm hopefully not going anywhere for a while, so keep expecting great content from Cheryl.
That's awesome.